welcome to the second lesson of our Forecaster Terminal Masterclass. In the previous lesson, we saw how to forecast, how to predict stock indexes thanks to the Forecaster Terminal software. You can find on our YouTube channel the previous lesson if you lost it, of course. Everything is recorded. Today, we will talk about stocks, okay? We will talk about companies which are listed on stock market, okay? And it's a very interesting lesson, this one, because we will go through all the different type of analysis you can do thanks to the forecaster terminal, and you will understand how to mastering this software, which is very powerful also on shares. Okay, so as I told you in the previous lesson, the forecaster, you can use the forecaster terminal in two ways. The first one, as you can see, is going inside the forecaster terminal, which I would like you to remember that it's built like Google. As you can see, you have a search bar where you can type something, and you can also use all the tools from Google. Exactly is exactly what you can do with the forecaster terminal, because you can go directly here on the search bar where you can find all the financial instrument, and of course you can go here and exactly like a Google, you can go through all the tools available in the software. Okay, so as I told you in the previous lesson, you have two ways for using the forecaster terminal. The first one is going directly to the search bar where you can find every instrument that you like. So if you would like to analyze a specific instrument, a specific stock, a specific index, a specific commodity, you can go directly to the search bar. Or if you're looking for investment or trading ideas, you can go through the tools you have available in the software. Okay, so you have these two separated ways to use the forecaster terminal, and of course it depends on what you have to do. So let's go to the forecaster terminal. Today we will talk about stocks. So let's start, for example, with one of the most famous stock that you can find nowadays on the stock market, and I'm talking about Nvidia. Okay, as always, the forecaster terminal has many different layers. We have, for example, the overview, the seasonality, the overbought, oversold, fundamentals. In the case of Nvidia, which is an American stock, you have also the politician. Okay, this is this design for the forecaster was we made the forecaster this way because we like to analyze the same instrument with different approaches. Okay, so for example, you can analyze Nvidia through a fundamental point of view, and you can find all the data, and we will deep dive in this approach, don't worry. But you can also analyze Nvidia prices, share prices, thanks to a more mathematical, analytical, statistical approach. Okay, of course these two approaches are completely different, but at the end of the day the goal is to find out which is the result of the analysis, thanks to a complete different approach. So it's like to use different lenses to see the same stock in order to understand what is gonna happen on this specific stock. As always, guys, you have your chat, so you can ask me anything you want. I only ask you to make related question to the topic. So Let's start from the first page of a stock. We are, as I told you, on Nvidia, but what we are saying right now, it's the same for every companies all across the globe. Let's start from the overview page where you can find, of course, the chart with all the 1 month, 6 month, this year, 1 year, 3 year, 5 years, 10 year, and 20 years performance. And something really interesting you can find is the sales, net income, price earnings, and dividends directly on the chart. This is particularly interesting because this tool, the possibility to have sales and net income and all the other information on the chart directly, is very important, because as you can see, when you plot the earnings, for example, on the stock chart, you can definitely see that prices tend to rise for the stock when the earnings rise, and prices tend to fall when the earnings fall. And as you can see right now, for example, it's not the Nvidia shares skyrocketed in the last 2 years, not because of something special we don't know, but because the company made a lot of money. Because as you can see, let me do a zoom on the chart so you can see much better. If we zoom in, as you can see, it was 2023 and the company had only, let's say, 4.37 billion in net income. The next year, which is 2024, the company had 29 billion. And right now, in the last year, the company closed with a $72 billion in net income. And this is something amazing that that allow the prices of the company in the stock market to rise. But as you can definitely watch from this chart, where you can find both the share price and the net income, is that the price for the shares goes exactly where the results are. This is why we can definitely say that the stock prices are driven by the company result. And this is something really interesting, because it's something that in the long run tell us exactly where the company will be, probably. Okay. And this is something also very interesting, because sometimes happens that in the short term the market is really pessimistic due to many things, like for example now it's a little bit pessimistic because of Trump tariff. Okay. And as you can see, what happens is something really nice. And what I mean is this: if you plot, as we always do, the net income on the chart directly on the prices, for example, at the moment, you can definitely say that we have an upside opportunity here. Okay. Because the stock prices tend to reach, they are attracted somehow from the net income line. And for example, let's do a very nice example on another stock. Let's go, for example, on Microsoft. If we go on Microsoft, which is at the moment the biggest stock on the S&P 500, as you can see, in the long run, prices tend to stay on the net income line, But sometimes it happens that prices, due to let's say a pessimistic view for the moment, go very far from this line. Okay, it happen also the contrary. For example, sometimes prices are investors are too optimistic, and the share price go far above the net income line. What happened in the long run? The price of the share tend to be at this equilibrium point, which is the net income line. When, for example, the prices go very far from the net income line in the lower part, they go down, let's say, it's only matter of time they will reach again the net income line. Of course, this is something very interesting, because it gives us a very nice opportunities when we have, for example, right now, on Microsoft or on Nvidia, as I told you before, a company which is performing very well, okay, fundamentally speaking. For example, Nvidia is doing great with the earnings, okay, but because of tariff, because of the geopolitical situation of Taiwan, which is the country where the chips are made, and many other things, we had a downturn. But at the same time, the um, the net income level is still very high. Okay, so we have a very strong buying opportunity, and this tool is very nice because we can see it, we can see the opportunity very easily in a very quick way. Okay, so for example, we talked recently about Microsoft, and as you can see, this is the proof that these, let's say, this little tip works really fine. Because look, for example, we had, starting from the beginning of 2025, a drop in prices, but at the same time, as you can see, the net income is growing. You have to remember that this number is the TTM data. It means it's the trailing 12-month data. It means that we um, we we add the last 4 quarters. So in this case, here you have the sum of the last 4 quarters, the net income for the last 4 quarters, and this is the best way to understand if a company is growing or not the net income. Okay, because you have the most updated situation for the company. Of course, if you switch, but we will deep dive very soon to the fundamentals, to the fundamental layer, and you can go to the raw part, where you can find both the income statement and the balance sheet. You can find here the TTM, which is, as I told you, we have to switch to the quarterly. It's the sum of the last 4 quarters. Okay, and this is amazing because, for example, in this moment, we can definitely understand how the company is doing right now, because we are using data that are coming both from 2025 and 2024. Okay, and this is really amazing because, for example, in the case of Microsoft, we can see on the chart, on the overview chart, that the results are going up. And in this moment, if the year ends right now, the net income for the entire year would be $96 billion, which is higher than 88 that the company did at the end of 2024. Again, in the overview page, we can also find the year's performance for the company we are watching, divided year by year. We can see something interesting, which is the dividend, and the software is telling us if the dividend is increasing or decreasing. And in the case of the dividend in Microsoft, it's increasing. And then something really interesting, we can find the insider transaction. Insider transaction tell us if a member of the management is buying or selling shares of the company. This data is very interesting only when a member of the board buy stocks, okay? Because probably if you have a look to all the companies listed in the United States, many times, lot of members of the board, also in this case the CEO, are selling shares. We don't know why they are selling. Maybe they need money for something else. Maybe they need a compensation for their job. And this kind of this kind of compensation is very efficient in terms of taxes. Okay, so the important thing is when an insider, someone from the board, is buying. This is a very interesting situation, because uh, they they buy just because they would like to make money, and if they believe in the company, if they know something we don't know, if they buy, they definitely think the company is gonna do great on the stock market. Okay, so this is something really interesting to analyze when we would like to see if a company has an upside potential or not, because if someone from the board is buying, is such a very interesting thing. Talking about the first layer, we said everything. As I told you, it's really interesting, this tool we decided to have inside the forecaster, because it gives us very nice opportunity. Okay, very nice opportunity on the stock market. For example, recently we talked about Palantir, and if we go to Palantir, as you can see, the um, the the company is now really skyrocketing on the market. Today they released the earnings, and even if the earnings are really nice, the company is dropping on the stock market. But for example, in this case, many times during the last month, the company went down a lot, and every time the company went very far from the net income line, it was such a great opportunity. I have many examples of this little easy tool from the past, but for example, one of the best trade we did a few months ago was on Lululemon. And look, Lululemon, for example, at the moment is very interesting, because look, I can make an analysis with you. As you can see, in the long run, stock prices follow the net income, okay? And at the moment, for example, the net income line is suggesting us that these shares should stay at the top, not at the bottoms. And for example, it was the middle of 2024, and we bought these shares because the net income was skyrocketing, but the prices were falling. And in that case, the company was falling because Nike, which is in the same sector, was falling. and the investor was really pessimistic regarding the entire sector. But at the end of the day, if the company is making money, at the end of the day, also the share price will go up. Okay, so this is something really interesting to watch, because you know exactly where is the opportunity. For example, regarding Tesla, you can see that, for example, when the share was here at the top, if you go back to our videos, we made a different video regarding Tesla. We said it's now time to sell at least a portion of our position on Tesla, because the company is really too far from the net income line. And look what happened. Prices fell down and they reached exactly what we call the equilibrium level, which is the net income line. Okay, this is really, really amazing. This is really an amazing tool, because it allows you to um, to 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 jump in a stock which in this specific moment could be in a very pessimistic mood from the investors. Okay, or you can understand if a company, for example, like Tesla did a few months ago, is in a too optimistic phase of his life. Okay, look at this point. For example, it was the beginning of 2023, and as you can see, Tesla was doing great, but for some reason I don't remember, the company was dropping on the stock market. And then what happened is history. And then we had exactly the opposite situation. The the there were so much optimism on the market, but at the same time, the fundamentals of the company were doing bad. And at the end of the day, what happened to the share prices follow what is happening on the fundamentals of the company. So of course, Scott is saying, in normal market condition, Lulu look like a good time to buy, but the whole tariff situation makes we wonder if we can take that trade. Current earnings are based on past and current inventories. Of course, Scott, of course, and we cannot predict exactly the future, but at the end of the day, you can do an evaluation and you can understand if this company is good for the long run or not. Of course, of course. We cannot predict the future, but if the situation is good enough, if the company is good enough for the long run, could be a really nice buy right now, because the stock is very low, of course. Perfect. So let's move to the other layer, which is the seasonality layer. Okay, let's go back to Nvidia, which is the example we are using today. Seasonality. We talked a lot about seasonality when we did the first lesson. Remember to see the first lesson, to watch the first lesson on our YouTube channel if you lost it. But I know it sounds counterintuitive, but seasonality works really nice also on shares, not only on commodities, not only on indexes. It really works also on shares. And as I told you in the previous lesson, what is seasonality? Very simple. The best example of seasonality I can do for you is the temperature. of New York City, if we see which are the average temperature of New York City, as you can see, let's go here. We have a January in New York City where we have a very low temperature, and then we go up until July, and then again we go down until again November, December. And this is a cycle that we can find because we measure the average temperature in New York City. Okay, so what we do with the seasonality is something exactly the same. If, for example, we plot the 10-year seasonality for Nvidia, what we do is something very easy, because we take the chart of Nvidia starting from the 1st of January until the end of December for the last 10 years. So we take 2024, 2023, 2022, 2021, 2020, 2019, 18, 17, 16, and 15, the last 10 years. And we do the average of all these charts, okay? And what we find is an average of the last 10 years. Very simple. What we can find inside this 10-year chart, 10-year seasonality, are patterns. So for example, in this case, as you can see, starting from the very beginning of May until the very beginning of November, in the last 10 years, on average, we had a very strong performance, okay? Because if we go here, we highlighted all these piece of chart, okay? In the last 10 years, exactly in this specific period, we had 80% a bull run, a bull trend 80% of time with an average return of 74%. And here you can find all the single years, as you can see, 2022, 2021, 2020, 2015, as I told you. And for every single year, we can find the performance for this specific period, okay? In the case of Nvidia, it's very simple to see a very strong pattern during all the central part of the year. Of course, if you remember from the previous lesson on the stock indexes, you can find a more, let's say, a more erratic situation, okay? But for Nvidia, we can definitely say that we have a bullish pattern exactly here in this part of the year, okay? You can find all the statistics, and you can also find the monthly average, for example. And as you can see, as you can see, for example, in May, in the last 10 years, 80% of May was a long month, okay? So 8 out of 10, we had a positive return, which is very interesting, okay? This is very interesting, but of course, this is what happened in the past, and we are not sure is gonna happen also in the future. Could be, but this is only a statistics. This is why we added to the forecaster terminal the correlation tool. The correlation tool is something really interesting because it tells us if the current price, which is here in pink, as you can see, is correlated or not to the seasonality you are watching. So for example, in this case, the current year, the current price is not correlated with the 10-year seasonality at all, okay? Because on on uh, it's only correlated 20, almost 22%. It means on 100 days, only 22, 23 days are doing the same of what it happened in the last 10 years, okay? And this is a very nice information, because if the current year is not doing is not performing as the seasonality, it means it's better not to use that seasonality. So what we can do, we can just go to the chart, to the seasonality tool, and we can add all the other seasonality. Let's add all the seasonalities. As you can see, the only one at the moment with a very high correlation is the 3-year seasonality. It means we can only keep that seasonality on the chart, the 3 years, okay? And in this case, we can see that the prices, the current prices, are moving exactly like they did in the past, like they did on average in the last 3 years, okay? So it means that we can definitely um, we can we can definitely expect something like it did, like it happened in the past, okay? In this case, if we go here, we can find that starting from next week, we can expect a rise in price for Nvidia of 36%, okay? On average, of course. If you go here and you see what happened in every single years, okay? We know that current prices are moving at almost 80%, like Nvidia did on average in the last 3 years. So in this case, we can expect this kind of return for the next month, okay? Because the actual prices are moving like like the yellow line, okay? And so we can go to the software and ask what we can expect here. We can definitely see that we have a pattern here, okay? We have an upward movement. We know that the actual prices are moving exactly like they did on this yellow line. And so this is what we can expect if the correlation remain high, of course. This is not sure at all. This is something that can change, but it's something interesting. And this is why we would like to use different lenses to analyze Nvidia. Because, for example, at the moment, we know we have an upside opportunity here because the company is doing great with the earnings, but the prices fell down in the last weeks, okay? And seasonality is telling us that we have an optimistic window which will start from next week until the end of August, okay? Can you see what we are doing? We are building a prevision for Nvidia company that is starting from a fundamental point of view, is switching now from a seasonality point of view. And what we are looking, if with the different lenses, with different analysis, we can find a common a common situation. We can find the same result. We can find the same output, okay? Perfect. So in this case, we can definitely see, we can expect an upward movement until the end of August, okay? And of course, if we go here, we can expect a downward movement in the next few days, and then an upward movement that can have a very interesting 37 average return for 3 months. Okay, this is really interesting. Of course, you also have the daily average, which is something interesting. And in this case, I don't use it a lot because I don't do day trading on stocks, but it's very interesting because, for example, if you plot the 10-year seasonality, you can find days, for example, which are very bullish. For example, the 14th of May in the last year. The 14th of May in the last 10 years has been a long day 100% of time. This is very interesting, especially if you like to trade on a daily basis. Okay. Philip, I use the days for my Forex backtesting and it works incredibly well. Yes, exactly. This is something that we will see when we will talk about the Forex, but these statistics are really good if you like to do day trading or very short-term trading. This is a statistic that really nice, both for the long and the short. So at the moment, we saw the overview, we saw the seasonality, and in both cases, we have an upside potential. Okay, let's switch to another layer, another type of analysis. We are on the overbought and oversold page where we can analyze prices in a more mathematical and statistical way. Okay, this is, of course, the chart for Nvidia. Okay, this is exactly the chart we saw until now. But in this page, we treat this chart as a series of data. Okay, this could be, for example, the chart of your temperature. If you are in the hospital, this could be the number of banana a shop is selling in I don't know where in Brazil. I don't know if they do if they make bananas in Brazil, but this is just a series of number. Okay, this is not this is, I mean, how can I say, we treat these series of number as a series of number and not like a chart. Okay, and in this case we have different indicators on the chart. The first one is the advanced DPO. The advanced DPO is a very clever idea we had here at the forecaster terminal, because it's something really interesting. First of all, what DPO is? DPO indicator. You can also find the Wikipedia page for this, the trend price oscillator, DPO. Okay, this is a very simple indicator because it takes away the trend from a chart. Very simple. I can do a very simple example here for you. So this is a chart, a normal stock chart with an upward move, a trend, an uptrend. Okay, the DPO is doing something really easy. It takes the chart and it take away the trend from the chart. So in this case, this is the normal chart, let's say the Nvidia chart, and this is the chart with the DPO applied. What we did is just taking away the trend from the chart. As you can see, I'm not an artist, so I'm not very precise, but as you can see, the chart is the same with the same highs and lows, okay? But what we did is something very simple. We took away the trend from the chart, and we have a flat chart without the trend inside, and we apply the 200 Bollinger Band. We definitely find every point where the prices are statistically high, okay, and all the points where the prices are statistically low, okay. Very, very simple. If we go here to the forecaster terminal, we called it advanced DPO just because we didn't plot the Bollinger Bands, but we just colored the phases where the prices hit the lowest part in green of the Bollinger Band and the highest part for the Bollinger Band. Okay, so in this case, we have this first indicator that tell us if statistically speaking, prices are too high or too low. Okay, and in this case, talking about Nvidia, as you can see, here we are on Nvidia, the previous low, this area, were a major low point because prices were colored in green, okay? And this is why the software colored in green the prices, because it means we were here, okay? Very, very simple. This is not the only indicator we have on the platform, because we also have the speed indicator, and the speed is something really interesting because, as I told you, we are using this chart not as a price chart, but as a signal, okay? This could be everything, as I told you, could be your body temperature if you are in the hospital, or can be the movement of a car, okay? So in the case of speed, we do something really easy. We imagine this is not a price, this is a car, and what we do is calculating the speed of the car with exactly the formula you can use in order to find the velocity of a car. Very simple. And this is something amazing because you have to imagine this price chart as a car. What is happening when a car is approaching, let's say, a turner, turnabout? Very simple. The car decrease the velocity, and then when it go outside the, give me a second because I have to translate something. Roundabout, yes. When it goes out the roundabout, it speed again, okay? Very simple. Exactly what it the car did here, okay? And how we can see if the prices are decreasing or increasing in velocity? Of course, we can find here. Look, very simple. For example, in this case, this was the lowest point for the chart, okay? And as you can see, let me paint better. This is the lowest low, which, as you can see, was lowest than the previous low, okay? But look here, what happened. even if the prices were lower than the previous low, the speed of the prices did not a new low. So in this case, as you can see, you had a new low, and of course, watching only this chart, you can imagine the company, the stock price is falling, but as you can see here, the speed of prices were already decreasing, okay? And look what happened later. The prices start to rise again, then they came back, and here we are with the prices that are crossing the zero line, because this in black, it's the zero line, okay? Very simple, as you can see. This is exactly the zero line, okay? And this is where you have the confirmation that the trend has changed, okay? Of course, you can use it also on the other side. Let's go, for example, here, okay? Here it was the end of October and Nvidia made a top. At the beginning of November, Nvidia made an higher high, but at the same time, the speed of the prices went down, okay? And these tell us exactly that prices are doing a turning point, because prices went up, but the speed of prices went down, okay? So for example, analyzing at the moment Nvidia, we can definitely say that this low was a very important low, and at the moment, both the advanced DPO and the speed indicator is telling us that we are on a very important low, okay? We just saw a very important low. We also have another indicator, which is the Wyckoff. Very simple. Also here we have a zero line. When the indicator is right like now at zero, it means we have the same number of buyers and the same number of sellers, okay? Also in this case, what we are looking for is a divergence between prices and the indicator. Look, for example, the Wyckoff, what happened. As I told you, when we have zero, it means the number of buyer equal the number of sellers, okay? What is important for us is to search for divergence. So for example, look, here we have a very big divergence between prices and indicator, because even if prices went down a lot, the number of buyers increases, okay? Look, here we have a very important law. Here we have another law which is higher than the previous one, even if prices went down a lot, okay? This is a divergence, and this is what we are searching on every indicators we have on the platform, because we have to find the opportunity in a specific moment where the market is in panic, for example, right now, okay? If we go back to Nvidia, okay, also here you can find an interesting situation, of course, because, for example, on all these downward movement, as you can see, for example, here you have an important low for the indicator, okay, and here you have some lows here, and then the prices went down, but at the end of the day we didn't have new lows, we have such like a plateau in the number of sellers, and it means in this case that we are on important low in this moment. But anyway, sometimes we understood it was a little bit difficult to analyze all these different indicators one by one. Okay, so we created the market mood meter, which is, as you can see, an average of all the indicator. As you can see, you have advanced CPO, Wyckoff, and speed. We merge all these indicators and we find an indicator which is very effectively saying if the stocks is in an overbought situation or in an oversold situation. Okay, we can definitely see if the stock prices is statistically speaking too high or too low. Okay, and for example, in this moment, we can definitely say that here, during all this period where the Nvidia shares just did the sideways, okay, the indicators is telling us that the buying pressure is growing and growing and growing, okay? Look, you have what we call a very strong divergence in this case. It's really interesting, okay? We can go, for example, also to Microsoft, and we can definitely find the same situation here. Because look, starting from the beginning of 2025, shares of Microsoft went down, but look what happened to our indicator. It was here below zero line, which is what we call the oversold or panic selling zone, which is exactly the best place where to buy shares because it's exactly where lows usually been made. Roberto, what do the green and red column means? Very simple. The indicator tell us here, for example, when it become green, when we have an extremely oversold situation. As you can see, when the indicator reach the minus 100 level, you see the green, okay? Because it's very probable that in this area you will find a low when you have such a panic selling situation, okay? If you go, for example, on Meta, as you can see here, you have a red color because the indicator went above 100 and is exactly when the shares made the top. And here the same, but with the opposite situation. You have the indicator which color the chart in green when it goes below 100, which is a very important panic selling situation. And we colored in red the FOMO situation because in general, when you have a FOMO situation, it's time for a top to be made. And we colored in green the panic selling situation because in general, it's when the lows are made, okay? And also in this case, as you can see, we can find a very strong divergence between the prices and the indicator. Look, this one is really nice and really important. You have the share prices that drop again and made a new low, but at the same time, the indicator is starting to reverse. And we have the indicator that is telling us a complete different situation from the prices. Okay, this is why, as you know, if you follow this weekly webinar every week, in this area with the indexes and stocks, we were very optimistic for a long reversal. Okay. Yes, of course, David, in the future, it will be definitely possible to search opportunities thanks to these green opportunities. Of course, we are working on it. We are working on many different tools that you will find very soon here in the Forecaster terminal. But yes, definitely. Okay. So we saw the overview, we saw the seasonal part, we saw the overbought and oversold, which is a mathematical statistical approach. Let's deep dive in one of my the best layer, which is the fundamentals. Fundamentals, guys, is a very important topic because we at the end of the day, as we saw at the beginning of this lesson, in the long run, stock prices goes where the fundamentals are. If a company is making money, is doing great, stock prices will do great. Very simple. This is the very secret of the market. Okay. So thanks to the fundamental analysis, what we try to do is understanding if the company is doing good and if the company is over or undervaluated. So in this case, for example, talking about Nvidia, we have three different layers. Okay, we have the visual layer where we can find chart regarding the company results. Okay, we can find the raw layer where we have all the numbers for the income statement, the balance sheet, the cash flow, both annually and quarterly. Okay, and we have the transcription. The transcription every 3 months when the company release their results, the management is telling something, they comment the results, and here you have all the transcription for every quarter. Okay, of course you can read it and instead of watching a film with your wife, you can stay all the night long reading all the quarterly, all the transcription. But we did something interesting because we added to the forecaster terminal the AI agent, and in this case, just clicking the button, you can ask the AI agent to give you a resume for all the transcription, and you will have the positive news, the negative news, the risk and concern, which is a very important voice because the management must tell you which are the risk and concern they see for the future, and of course the future outlook, the notable information, and everything you need to know about what the management said. You can also do the same in the raw page where you can ask the AI agent to analyze the income statement and the balance sheet. Okay. And we teached to our AI agent to analyze the data. And this is something very important because as today we use the calculator for doing our math, now we can also use the artificial intelligence to analyze income statement and balance sheet. Okay, let's go back to the visual part, which is which is very interesting because here we can see the financial, and we can definitely see in a fingertip how the company is performing. Okay, so in this case we see that the company is growing both on sales and net income. Okay, we can see also the quarterly. Okay, and we can also see both on annual and quarterly the ratios. What ratios are? Something really easy. We have the profit margin, the ROI, and the debt equity. Profit margin is very simple. Of course, you have all the explanation here. I would like you to remember that the forecaster terminal aim is not to be a black box, but we really would like you to understand the data you're watching, because you have to trust the data you're watching. And if you don't understand from where they are coming from, you cannot trust the data. So every time you see something, we explain to you how we add this result and what is it. Okay, so in the case of Nvidia, here we have a very high profit margin, 64%. It means that every $100 of sales, 64 become earnings, which is an amazing result. ROI, very interesting, return on equity. We can see the ROI, return on equity, measure how much profit a company makes compared to the money its owner, the shareholder, have invested in the company. Okay, very important number. And of course, the debt equity. This is the number of debt compared to the equity, which are the money the shareholder put it in the company. If it's below 1, it means the company has more equity than debt. That in general is a good news. Okay, of course, we have many years, and we have also the quarterly, because it's very important not only watching a single year, but it's important to watch the trend of the ratios. We have to watch both the trend of financial and ratios in order to understand which is the trend of the results, and this is very important. Thanks to the trend of the result, we can calculate the fair value, which is, in the case of forecaster, an average of 3 different approaches. We have the discounted cash flow, the Peter Lynch method, and the economic value added. Why we use 3 different approaches and not only one? Very simple. I show you something. As always, we didn't invent nothing regarding this type of evaluation, but these are methods that you can learn if you go to the economic university. Um, why we use 3 different calculation and not only one? Because of course these different methods target different parts of the income statement and the balance sheet, and we can have a more resilient result if we use different approach and we use different method that target different part of the income statement and the balance sheet. Okay, I always do an example. How can you, for example, evaluate 2 different person, completely different person, like Usain Bolt and Woody Allen? Of course, you cannot evaluate them with a single method, because if you evaluate Usain Bolt for his velocity, probably he, he will have a much higher valuation than Woody Allen, which in velocity probably, I don't know him personally, but I really think he is not fast as Usain Bolt. Okay, so this is why we we use different method because of course we are approaching many companies inside the forecaster, and if we use only one method, we can maybe we can maybe evaluate Woody Allen with something that it's not that doesn't fit him. Okay, so in this case, for example, we evaluated USA in Bolt 100 on 100 regarding the velocity, 10 on 100 regarding the creativity. Of course, it's just an example. Age 37 on 100, so the average is 49. Okay, and regarding for example, Woody Allen, we have 1 on 100 in velocity, 90 on 100 in creativity, and age 88. Okay, so we have an average result of 59. This is just an example to let you understand why we use three different approaches. And it's important we don't put any type of biases inside this calculation. What we use in order to calculate the fair value are exactly the original formula for every single method. Okay, and this is what we do. For example, the Peter Lynch method, if you would like to deep dive fair value formula, here it is. It's very simple. It's earning per share multiplied by the earning per share growth rate. Okay, so we have all the data. We have, as you can see, the growth rate for the net income. Okay, and that's it. This is all the data we use for calculating the over and under valuation. Of course, this is not enough, because when you would like to understand if a company is good or not, you don't have only to watch the financials or the ratios or the fair value. You have to understand if the company is solid. And this is why we created the solidity part for the fundamental layer. And here we have three different scores that are really important. The first one is the Altman Z score, is an amazing score that tell us if the company has a risk of bankruptcy. Also in this case, we have a public formula. You can go on the internet and you can find exactly here it is. Okay, and the formula tells if the company in a safe zone, is in a great zone, or as a risk of bankruptcy in the case the result is less than 1.81. Okay, of course, in the case of Nvidia, we do not have a risk of bankruptcy. We have a very high Altman Z score. Piotrowski score is another very interesting ratio made by Piotrowski, which is a professor of a very important university. Also in this case, we have different number. We have also in this case a very simple formula, okay, that you can of course find online, but I can show you better here. Okay, the results is a number between 0 and 9. Of course, if you find a company with 6, 7, 8, or 9, it's considered a strong company. How you can calculate this number is very easy, because you take 1, 2, 3, 4, 5, 6, 7, 8, 9 ratios, which are, for example, the net income. If the net income is positive compared to the previous one, you add 1 point. The same for operating cash flow, the same for return on asset, the same, the quality of earnings. if you have a positive ratio compared to the previous one, you add just 1 point. At the end of the day, if you have 9, it means that you have a better situation compared to the previous one, okay? And you have a solid company. This ratio is very interesting because this is a study from Société Générale, a very important European bank. And as you can see, they divided all the company from US, Europe, UK, and Japan in groups. Company with a Piotrowski F score of 1, Piotrowski F score of 2, Piotrowski F score of 3, 4, 5, 6, 7, 8, 9. And they realized that if you buy only companies with a Piotrowski score of 9, you overperform the average of the market. And the same happen at the opposite side. If you buy only company with a Piotrowski score of 1, which means it's not performing well, fundamentally speaking, a group of shares made of only Piotrowski score, very low Piotrowski score, it will underperform the market. And this is a very interesting metric that tell you just in a very quickly if the company is doing good or not. And this is why we plotted not only 1 year, but of course the trend. Look, the trend for Nvidia is very nice. Benisham score is another really nice indicator, another ratio, very important, because it tells us if the company is unlikely to be manipulating its earnings. Okay, this is a very uh, popular ratios because I don't know how old you are, but if you go back in 98, students from Cornell University, they applied the Banish model and they unveiled the dark truth behind their corporation facade. And this is something really interesting because this is the formula. It's a little bit complicated, but of course you have the formula. It tells us if something bad has been done with the numbers inside the income statement and balance sheet. Okay, and um, as uh, as you can see in the past, this ratio helped to find many fraud, like for example the Wirecard manipulations has been made in 2020. Okay, and as Dr. Lee say, a professor at University of Washington, a rising combined score from 8 specific metrics suggesting a company is growing but also losing its core business strength and could be engaging in aggressive accounting. Even if legal, because of course we don't, this is not a proof that they are doing something illegal, but if they are doing something like that, if they are doing an aggressive um, an aggressive accounting, it's better to avoid these kind of companies because they could have problems in the long run. Okay, so these are 3 ratios very important to analyze the solidity of a company. If the company is solid enough, we can go deeper and we can analyze the value generation, which is another uh, chapter inside the fundamental layer. And here we have a very nice parameter, which is the shares outstanding. Very important because this is the number of shares that are on the market. And if the number decrease, It's something really good for us investors because the value, the intrinsic value of all the other shares that remain on the market tend to grow. Okay, I have a very quick example here for let you understand what is the share repurchasing. For example, if we have a bottle of 1 liter of water and we divide this water in 4 glasses, we have, of course, 0.25 liter for every glasses. Okay. If we take the same liter of water and we divide it in 5 glasses instead of 4, we have, of course, 0.20. Okay. And this is something really interesting because sometimes it happens when that the company is doing great as results, as financials, but on the stock market, the company doesn't grow. Okay. And probably it's something that happens when the company is doing good, but it's also issuing more and more shares. Okay, which is something you can do if the company is doing really, really great. But as Nvidia is doing since 2022, it's better to repurchasing shares, because what's happening if you're repurchasing shares, the value, the same liter, if you divide the same liter of water in 3 glasses and not 4, you have 0.33 liter for every glass. Okay, so if we go from this situation to this situation, very simple. The Of course we can do the same example with shares. If you have a company which worth 1 billion and you have 4 shareholder, you have 250 million for every share. Okay, if you add 1 share, the value of the company remain the same, but of course the value of all the other shares drop at 200 million. The opposite happen if you have the company which still value 1 billion and you take away 1 share from the market, the value of the free shares that remain on the market goes up until and reach 330 million. This is why it's very important to have a look to the number of shares, because in general, what if a company is repurchasing her own shares frequently, it's something that allow the prices of the stock to go up constantly. For example, here we are on Apple, and Apple is doing buyback since ever. Okay, here we are on Meta, and Meta is doing buyback since ever. Okay, it's a sign. Doing a buyback, repurchasing all own stocks is a sign the company, the management think that the company is undervalued. Look, for example, we have ASML, which is a very important company that makes chips, make not chips, but machines that makes chips. If you go here to the fundamentals, um, look what they just did. They just repurchasing lot of shares because the shares went down a lot, and they really think the company is undervalued, and this is why they repurchased a lot of shares. Look, for example, here what we said at the beginning of this lesson. Look, This is a very nice example of a company which is going down because of tariffs, but the results are growing because this is the only company that create special kind of machines for creating chips. And look, results are really going up and the prices are going down. This is a very huge opportunity, and I recently bought shares for this company, which is an amazing company. Okay, and I have the confirmation that this company is amazing because if we look the fundamentals and we look the share repurchasing, we can definitely see that the management is aggressively repurchasing their own shares. Okay, because look, they did something great because the price is very low. As Warren Buffett said, when you are told that all repurchases are harmful for shareholders or to the country or particularly beneficial to CEOs, you are listening to an economic illiterate. Okay? And this is Warren Buffett talking about repurchasing buyback program. Okay? Buybacks are always good. And this is why we can see the buyback trend here on the forecaster terminal. Look at Microsoft, for example. They are repurchasing since ever. Okay. Another interesting voice is the shareholder yield. Okay. If you are looking, for example, to a company, here we are on Microsoft, of course, you have a dividend yield. This is the yield you get if you buy shares of the company, okay, just from the dividend. Of course, everything is explained. Shareholders yield is very interesting because you add to the dividend yield the net buyback yield and the debt pay down yield. It's very interesting because especially if you're looking for a company for the long run, to invest in a company for the long run, you really understand, thanks to the shareholder yield, from where the dividend is coming from. Okay, because if you have a shareholder yield which is higher than the dividend yield, it means that the dividend you are getting from the company really is coming from good result. Because if you have, for example, a shareholder yield which is lower than the dividend yield, it means that the company probably is doing debt in order to pay you a dividend. And this is something that sometimes happens to companies, but it's something really bad because it means they are using your own money in order to pay to you a dividend. Okay, so this is a very important metric, the shareholder yield, because it tells us if the company is doing is paying for real is is a shareholder or not. Okay, here on the right we have the weighted financial, which are very interesting numbers because you have the sales compared to the number of shares, the net income compared to the number of shares, the free cash flow compared to the number of shares, and the gross profit. Like in this case, all these numbers are growing. It means that the company years by years is becoming more efficient. Okay, and this is a very important ratio. These are very important ratios because you really understand if the company is getting better year by year. Okay, avoid companies that has this ratio going down because it means they are not improving their efficiency. Okay, and of course here you have um, a resume of all these ratios. in this case, you have a shareholding yield which is decreasing. Okay, so it's not the best situation, but of course, you have go deeper to the analysis. Let's go, for example, here. Here we have a shareholder yield for Meta, which is increasing. Everything is good, and this is why the company is valuated robust. Okay. In the case of Microsoft, the company is resilient, which is of course good because he's here, is in green, so it's good. But robust, of course, it's better. Okay. The last, so in this case, guys, talking about Nvidia or Microsoft, let's talk about Nvidia, which is the example we would like to make. As I told you, first of all, we can see the under overvaluation. In this case, we have an undervaluation of 62%, which is very interesting. We have a company which is very solid, okay, with an N.2 score of 54, incredible. Piotrowski score is good. Benichem score is minus 2.28, which is good. The company is doing great as per efficiency. Look how it's growing. And they also doing buybacks since 2022. Really nice, amazing company. Okay. Fundamentally speaking, we are talking about a company which is nice, which has an upside potential. And so we can definitely say we find also in the fundamental layer the same situation we saw in the overview, in the seasonality, in the overbought, oversold. Okay. Of course, you can deep dive inside the analysis. You can, as I told you, use the AI forecaster AI agent that give you a deep analysis of the income statement, the balance sheet, and everything. And this is very interesting also for the transcription because, as I told you, at the moment there are many people inside the banks that are doing the analysis, especially young people, but in month or year, this kind of job will be something like the calculator. Today, everybody are using the calculator, and it's stupid not to use the calculator because I mean, it would be stupid not to use it, okay? And the same is with the artificial intelligence. We teach how to use the artificial intelligence, how to do this kind of analysis to artificial intelligence, and it's better than us to make resume of papers and papers and papers, and this is very nice, and you can pick something interesting inside all these numbers and all this data in order to understand if the company has a very strong potential for the future. Talking about the transcription here, what is very important is this voice, risk and concern, okay, and future outlook. Here you can definitely see if something bad is in the eye of the management, okay? So always go to the transcript and watch and listen what the management is talking, is saying about the risk and concern and the future outlook. Very, very important. If you would like to do a complete analysis of every stock, it's very interesting to do the full analysis. And especially in this case, what is very interesting is the competitive advantage analysis. This is something that was invented by Warren Buffett, the moat analysis, okay? And the artificial intelligence in this case give you a rating for the moat that in the case of Nvidia is 9 on 10, which is very high. And this is very interesting because the competitive advantage is telling us something really interesting about the company we are analyzing. And it's very important to understand what kind of company we are analyzing, okay? For example, I recently made a portfolio with only, I can show you, for example, on this very important law we just made on the market, I bought, thanks to the forecaster terminals, all the companies with a mode of 9 on 10. As you can see, we have Ferrari, ASML, LVMH, L'Oreal, Nvidia, Meta, Palantir. I bought it today because it's dropping, so I bought it just today. Meta, Microsoft, Adobe, Apple, and Visa. Okay, this is the Bitcoin, and this is another instrument that probably you even cannot buy because it's on the Italian stock market. Anyway, um, I'm so convinced that we are on a very important law that I took all the companies with a mode of 9 on 10, which is the highest number we can find. Look, for example, ASML, it's 9 on 10. Okay. And I bought all the shares because I really think it's a great way to analyze the stock market. Okay. Last layer, guys, is the politician. In the United States, you have politician must say if they invest in a specific stock. Okay, so inside the forecaster terminal we have the US Gov tracker, and we can see all the single trade every politician is doing. Okay, we can track also a specific politician. Okay, you can find the specific page with all the trades. Okay, but we have also the layer for a specific stock. So for example, in this case you can find all the trades for a specific for Nvidia. You can do it also for Meta. You can do it for all the American companies, the American shares. Okay, and this is something interesting because sometimes it happens that some politician buy a specific sector, buy a specific company, and this could be really interesting in order to understand what is happening on the market. My honest opinion, I don't use it a lot, this tool, because watching the politician trades in the last 6 or 12 months, they are not so good. So I prefer to do my own analysis and not try to follow someone that I really don't know who is and why is buying or why is selling. Okay, but sometimes it's interesting because you can see if they are buying or selling, and it's nice. Look, for example, in the case of Nvidia, they bought a lot starting from 2023, and then they sold a lot here on the tops. So it's quite interesting to see, but in my opinion, it's not, it's interesting but not so interesting. I don't know how to say, but I mean, I prefer to do my own analysis. Sean is asking me, how can I find the stocks with the highest moat in one go? You cannot right now, but we are working on screeners, and they will be soon available. Okay, we are improving the forecaster a lot, and this is something that you will definitely find as soon as possible. Okay, something else to say regarding the stock analysis? I think we said everything. Of course, as I told you, you can go directly on the stock from the search bar, or, for example, you can find investment ideas from the tools you have here. And talking about the stocks, you can find, for example, the rankings. We talk about the rankings in the previous lesson, but for example, you have here all the indexes, you have here all the sectors, and you have here all the industries, okay? For every layer, for example, let's go to the S&P 500. Let's say you would like to find, we talked about this feature in the previous lesson, because as you can see, you can find the over or undervaluation for the entire index. But if you are looking for opportunities, talking about the stocks, you can find the best opportunities here. For example, talking, if you are looking for the best company, fundamentally speaking, you can just on this button, and here you have a list of the companies with the best fundamentals. Okay, and this is something really, really interesting, because here you can find a, something like a screener with the best opportunities. Okay, and if you would like to deep dive in the analysis, of course you can open the specific page for the stock. In this case is Nike, and you can start with the overview, the seasonality, the overbought, oversold, the fundamentals, and the politician. Okay, and here you have, with thanks to this button, the best opportunity, fundamentally speaking. Okay, you can go to the ratio page, for example, where you can make a list with the best dividend yield company. Okay, for example, look, the first one, Dow Inc., has a very high dividend yield, but a shareholder yield of only 3.88, which is something that I don't like, because it means that the real dividend yield is 3.88, but the difference between this and this, probably they made loans in order to create this money. Probably they are printing shares. Of course, we have to deep dive better, but no, they are not printing shares. But look, something strange is happening on this company, because has a moderate risk of bankruptcy, and somehow, let me see. Look, for example, they are increasing the debt years by years, probably because they would like to keep high the dividend. Look, from 0.75 debt equity in 2022, it became 0.85 in 2023. It became 0.96 in 2024. As I told you, probably they are raising the dividend yield in order to attract the investor, but the reality is that the investor are paying by themselves for this very high dividend yield, okay, which is a countersense. I mean, you can go here to the ranking page. Where is it? The ranking page, and you can create all the list you want in order to find the company to analyze. Something very interesting also, you can rank the stocks for a specific index, for a specific sector, for a specific industry, also for the stock performance. And this is something really interesting, because you can find really nice opportunity watching, for example, which are the best performance of the last week, which are the best performance of the last month. I mean, this is a tool, the ranking, that allow you to screen an entire market, an entire sector, an entire industry, just in a fingertips. Okay, for example, you are interested in as I am, in the luxury sector, the luxury industry in the consumer cyclical sector. Here you have, for example, you can find just in a very a very few seconds which are the best company fundamentally speaking inside this specific sector, this specific industry. Okay, and of course you can find a lot of opportunities inside. Another tool you can use in order to find the good opportunities for an investment, for investing, is the break even. The break even is a very nice tool because it do something really easy. Every time a company for the first time is closing a positive quarter, you will have the company in this list. So for example, recently we can see Twilio, which is a very interesting company, released the earnings. And as you can see, this is a company which in the past always lost money. Okay, why it's now in this list? Very simple, because we have a positive quarter for the first time. This is something very interesting because if you go here to the explanation of this section, as you can see, we have many examples of companies that after the first quarter in profit, they started to skyrocket. Palantir is one of the example, one of the most famous example, but also Tesla started to skyrocket in 2018 after the first quarter in profit. Okay, and Twilio, for example, right now is exactly in this situation. What we can do, of course, we can analyze the company. Don't You can not have a look to this part when you are talking about a company that lost a lot of money for many years. It's difficult to find an undervalued company. Look, for example, the discounted cash flow, the Peter Lynch method is not applicable because it doesn't work with the company that lost a lot of money in the past. But for example, Twilio is very interesting company because as an Alt1 Z-score of 472, it means the company has a solid situation. Okay. Also, the Piotrowski is in a very good momentum. The Banish score tell us that the company is unlikely to be manipulating its earning. And look, what is very interesting, the company just started a buyback program. Okay. The management think that the company is undervalued and they repurchase their own shares. Very, very, very interesting. They also have a positive earning yield. The weighted financial are increasing. It means the company is becoming more efficient. Okay. And if you analyze, thanks to the AI, the transcription of the last quarter, you can definitely see a very interesting potential for the future. Okay. Because they have a very interesting future outlook and they are investing a lot in AI for their product and services. Okay. And this is why, for example, I bought the company, because also the overbought and oversold page is telling us that we are very close to a major turning point, probably. This is very interesting. The last tool I would like to show you in order to find opportunities on the market is the quantum screener. Of course, today we are talking about shares, so you can definitely go here and search on the S&P 500. This tool is very nice, especially if you are looking for trading opportunities. Very simple. The tool is telling you, for example, that Accenture right now, the price of Accenture has a 94% correlation with the 3-year seasonality. Okay, very simple. You can open this page and you can see what you can expect from this share. Okay, you know that the current year is moving exactly like the prices did in the last 3 years on average. Okay, so you can expect a 7.8% starting from today, from tomorrow until the very beginning of August. Okay. And this is something amazing because you can find on the S&P 500 shares, the MSCI World, or the stocks Europe 600, the best opportunities starting from tomorrow. Okay, as you can see, these statistics start from tomorrow, and you have the best opportunities. And of course, you can evaluate to do a trade on these companies based, in this case, completely on seasonality. Okay, of course, we already saw the seasonality, and this is very interesting because you have all the statistics and you can definitely see if you have an upside potential. And this is a tool a lot of people are using a lot because it's very powerful. It's inspired by Jim Simons, and we really use it a lot because you can also, let's say, play with this tool, because in this case, for example, you can see the statistics regarding um, regarding 3 month, because here you can choose 1 month, 3 month, or 6 month. Okay, but in this case we are on 3 month, and then of course you can play, you can say, but why do I have to close this trade in August where if I can go on until November? And of course you can have all the statistics, and if you would like to see when the overbought and oversold, you can definitely see. And in this case, as you can see, it's very interesting because look, here we had a very important low with the indicator, the market mood meter, that told us that we were in a panic selling mode. Then prices went down, but the indicator gave us a divergency. And here we have the confirmation the trend has changed because the prices crossed the zero line. Okay. So in this case, we can definitely say, yes, seasonality is telling us that we have an opportunity, and we put another pair of lens, another lens, and we do another kind of analysis. And as you can see, the overbought and oversold is saying that we have an opportunity, an upside opportunity. Of course, we can go to see the fundamental if we would like to be more confident with the analysis. And look, we find a company which is undervalued, which is growing, which has no risk of bankruptcy, which is doing a repurchasing program, a buyback program, which is nice. So we can be more confident in go long on this stock. We saw all the tool related to shares, and that's it, guys. I hope you enjoyed this lesson regarding the stocks. See you next week because we will talk about commodities. Okay, so see you next week. Hope you enjoyed, and that's it. I'm a little bit tired. See you next week. Bye bye. Ciao, ciao.